Welcome to The Intentional Investor with Matt Zeigler, where he and his guests explore the intersection of investing and life, portfolio, and purpose. Nothing in this podcast is investment advice. Nothing in this podcast is advising you to buy or sell any security or to do anything with your money. Seriously, you should only act on investment advice from someone you know and who knows your unique situation. We are not that person. Matt Zeigler is a managing director at Sunpoint Investments, and the opinions expressed on this show do not necessarily reflect the opinions of Sunpoint Investments or of Second Foundation Partners. Securities discussed in the podcast may be holdings of Sunpoint Investments.
You're watching The Intentional Investor right here on Epsilon Theory YouTube. I'm your host, Matt Zeigler. My guest today, now he's not Michael Scott, because he's not the one-time great leader of Dunder Mifflin, the legendary Scranton Paper Company, but he is a fellow Michael that once did occupy a former ice factory, as in blocks of physical ice people, that was based outside of Scranton, Pennsylvania. I have questions. I hope we'll get there. Michael Scott once said, Wikipedia is the best thing ever. Anyone in the world can write anything they want about any subject, so you know you're getting the best possible information, which this guest might amend to. Markets are the best thing ever. Anyone in the world can buy or sell anything they want, but that doesn't mean price is giving you the best possible information. He's also not John Green, the famed young adult author. That Green said, my responsibility is to try to tell true stories. To me, a true story is always hopeful, but never simply uncomplicatedly happy. And maybe this Green's guest variation on that would be, my responsibility is to try to tell true stories, but because to me, a true story is always hopeful, but never simply uncomplicatedly happy in its outcome, because the truth might just be your idea is worthless and I help make Peter Thiel some more money off of it. And since that was getting dark, let's get a little happier. It's not Kermit the Frog, but just because it's never easy being green. As Kermit said, someday we'll find it, that rainbow connection, the lovers, the dreamers in me. This guest might paraphrase, someday we'll find it, that market equilibrium, the active, the passive in me. Okay, better, someday we'll find it, the house that's not an RV, my wife, the kitchen set up to cook for kids and me, but enough beating around the quote bush, currently of Simplify Asset Management, the best board game character I never get bored of, best Professor Plum since Christopher Lloyd. Get a clue, it's Michael Green. Welcome to the show.
Well, thank you. I'm just a little confused because, sir, this is a Wendy's.
The redhead girl. Where is she?
Yeah.
What we need her most.
No, it's a pleasure to be here, Matt. Thank you for having me. That was quite an intro.
We have to cover all the bases if we can. And I have to start with this. You love to cook. Mise en place. Yes. Mise en place on an RV. Like how? How?
I actually don't even remember doing that, but you could cook anything anywhere, right? I mean, literally, that's the wonder of modern technology. Cooking is just the application of power in intense form to various raw foods, right? And then if you have access to power, you can cook.
Okay, so the specific question, and mise en place is this French term that means everything in its place. And I just could not comprehend how you could have any setup in that confined space, like actually on the RV itself.
There's a full kitchen. What are you talking about? There's a full kitchen. There was an oven. Not big, but again, it doesn't matter, right? I mean, I've cooked on what are they called? Hot plate before, right? I've actually used a Bunsen burner to cook, believe it or not.
What did you cook on the Bunsen burner?
I actually used the Bunsen burner to do a steak sear.
To do a steak sear, just the sear itself? Did you reverse sear the rest of the steak?
The steak was sous vide. Yes.
Okay, sous vide first. Excellent. When did you do the Bunsen burner? Bunsen burner sear? How long ago was this?
Probably the last time I used a Bunsen burner was in my 30s. So it's been a long time.
Okay, it's been a minute. We won't establish that. Take me all the way back in time. We've got so many things that we can cover. I'm really curious. You grew up on a farm. You're a Northern California kid. I think you're our second farmer guest.
It's so I think a lot of people actually have a somewhat similar background. I'm a little older than you are. I was conceived in 1969 in San Francisco. You can do the math. And grew up on a very small, right? So, several acres of land in what is now called Silicon Valley, but at the time it's called Santa Clara Valley. My mom stayed at home and loved to bake bread. My father, was a personal injury attorney. And he also bred dogs and hunted. And so we had 18 dogs. We had between at a point in time, between 50 and 75 chickens. We had multiple goats, a horse, pigs on occasion. And most of it was there because my mom actually grew up on a real farm. She grew up on a ranch in Oklahoma, wanted to recreate that opportunity for her kid. And so that was the kind of idyllic environment that I grew up in. Now there's all sorts of challenges that you encounter as a young child growing up on a farm. The presence of death is something that you're introduced to at a young age. Actually, I think that's really helpful. I remember one of my first memories is actually being less than 3 years old and helping my mom cut the heads off chickens, holding the young roosters, right? So holding the roosters' heads down while she chopped off heads. That I think actually prepares you to be prepared to execute a trade. Oh, who knows how we end up in these places, but that is actually where I did start.
Was everything more or less locally sourced for you guys on this farm? Like you grew your own food, you did all the stuff yourself?
No, not by any stretch of the imagination. We went to, I can't remember what the name of the cooperative is in Palo Alto that my mom went to shop for. And she was one of the founders of La Leche League, like basically a nut, right? Cool. Let's just be very straightforward on this. She volunteered at Stanford to be a wet nurse for, preemie infants and everything else. Like my mom was an incredible person, right? She unfortunately passed away earlier this year. But she, had her own challenges with mental health and everything else. And so, it was an interesting experience in a lot of ways, but what I'm very, very deeply appreciative of the opportunities and sacrifices they made to give me the chance to become who I am today.
What about Dad? Is Dad still with us?
No, Dad passed away in 2005. So, and he was equally as complicated, if not more so. So, I assure you, if you were to get my children on this podcast, they would say, Dad's a complicated fellow. But overall, they seem to have turned out okay.
Well, not bad at all. Now, what about like this? Where's the burgeoning interest in like science and stuff like that come from? Because I think that's the first path for you. Is that just growing up on a farm and being curious?
No, I think it was probably somewhat similar to my oldest, right? Who, when I was, he's 5 years old, we're walking through Manhattan. He knows I'm a fund manager, and yet I, inculcated a love of science with him. And he turns to me and goes, Dad, it'd be so much cooler if you were a scientist, right? I think that always existed in my family, that there was a deep and abiding love for knowledge and science. For me, that took the form of, very early on getting interested in, everything from biology to chemistry to physics. My mom made, again, tremendous sacrifices to drive from the peninsula, right about 45 minutes away from San Francisco. She would literally go volunteer at the California Academy of Sciences so that I could obtain free classes in science education at the California Academy of Sciences, which they began offering in the 1970s with the advent of what they called the Discovery Room, where she also volunteered her time. We were not a wealthy family by any stretch of the imagination. So my mom used what little time she had, in addition to eventually holding down a job to help supplement the family income, to go out of her way to make those opportunities available to me. And it's something I've actually written about on my Substack, the incredible loss that we've experienced in cities like San Francisco, as those opportunities have been devalued, as there's been a growing divide between the wealthy and the less well-resourced, in terms of obtaining access to that type of science education.
Was it all types of science that appealed to you at that age, or just growing up, or was it narrow?
I wasn't so big into climate science, but that's a joke. No, I like, honestly, anything that could fall into the scientific method, you could do an experiment, or you could test, or you could read on, was very fertile ground. And I'll also say that, having seen this with my kids, right, I think there's a very happy medium that began to emerge in the 1960s and 1970s. It may have been earlier, I just wasn't around to see it. In which, the prevalence of literature available and accessible to kids, I would argue, is kind of a happy medium, right? It wasn't that there was an infinite number of, Maisie books available, or the, various stuff that's around. There was enough around to kind of capture your interest and force you to then transition into adult literature, right? And so again, at tremendous cost when you adjust it on a purchasing power basis, my mom made sure that I had a full set of encyclopedias, right? Which when you don't have garbage novels to read, guess what you do? You read the encyclopedia, right? And so, like that was something I did multiple times. Reading traditional religious texts have been very important in forming my worldview. All these things, I think you don't necessarily gravitate to if there's a video game available to you, or if there is a schlock vampire novel that's available to you. I think it becomes a very easy escapist route to go Harry Potter instead of the encyclopedia.
What do you think is the thing about where you get the exposure and then you have the curiosity and then you have to seek out the next piece that you can possibly find when that's a limited resource?
I mean, I can only speak to my own character, right? I've just always if there were one thing I would characterize myself as, it is intellectually curious, right? Like there's a fascination for me of why things work, right? And it's the very classic thing you hear about, oh my God, my son destroyed the radio by taking it apart, right? I did that multiple times. Eventually you figure out how to put it back together. But the first couple of times your parents are, both happy and sad at that, particularly when there weren't that many cheap radios from China or even Japan at that point that allowed you to do this. But again, my parents bent over backwards to give me the opportunities that turned into who I am today.
In high school, was this like, were you on the college track straight out the gate because of mom and dad and just the focus?
So actually high school was a really interesting experience. I was a scholarship student at a private elementary school that, again, my mother managed to get me into, which they, were excited to have me there as somebody who was truly intellectually curious. I was really fortunate to be part of a community that was very affluent in that context, right? And to be around a community in which there was a tremendous love of learning. Even on that scholarship, there was real hardship associated with that for my family. And so again, sacrifices, I think, are a really important message there. When I was in second grade, like the financial burden, just remember, this is the mid 1970s, right? So things are tough, particularly in California, where property taxes and prices have been exploding. And my parents tried to transition me into public school. And, it was a really interesting experience because it goes from, he doesn't know how to, they tried to put me from second grade into third grade. I get into third grade towards the end of the school year because the private school year has already ended. And so they put me in. And the first reaction is like, oh, we're not sure he's prepared, or, we're not sure he's capable of handling the transition to third grade because he doesn't know, some of the math, for example. Right. And my mom is like, you've got to be kidding me. He just doesn't know the language that you guys are using. Give him a week. Right. And within 3 weeks, they're like, yeah, he's going to have to skip to sixth grade. And it was just one of those things where she's like, okay, I can't do that to you. Right. Developmentally, that would be a disaster. And so again, story of parental sacrifice. I think a lot of people look at today's world and they're like, it's too expensive to raise kids, right? Remember, this is the aftermath of the Club for Rome's, limits of growth. And it's accepted that you shouldn't have that many children, right? And so nobody actually was really making available those resources in a lot of ways. And in some ways, as I've described, I think actually resource constraints are a source of innovation. I think that's a really critical point that people need to recognize, that if you are unconstrained, you often transition into languor or into decadence. And I think there's some evidence for that. But, following that experience, my parents managed to keep me through the process. I then went to a elite private school in San Francisco called St. Ignatius College Prep. And that was actually really interesting because that was a transition, right? High school is a weird experience where you go from being a nerdy kid where academic competition is fantastic to a school like SI that for a long time was actually dominated by athletics, right? And dominated by the idea that, doing homework wasn't all that cool sort of stuff, right? You succeeding in school was a sign that you were a nerd. And candidly, like that, there was elements of that appealed to me. I'm a big guy, right? I like sports. I played, I was, in swimming and then tennis and lacrosse and, never really came across as like this little tiny nerdy guy sort of thing, particularly after I hit my growth spurt. But high school, I would actually argue in a lot of ways was anti-intellectual in its experience. And that led me to explore leaving early and going to college. I fortunately, again, was given the opportunity to do so. I spent a summer at UC Santa Barbara studying physics and economics. Candidly struggled with economics, probably still do, as most of my listeners would suggest. And, did really, really well in physics, was given the opportunity to go to Berkeley and meet with Louis Alvarez in his lab at UC Berkeley. Louis Alvarez famously won the Nobel Prize for his work on the cloud chamber and the study of quantum physics. And realized that I was just not that smart, right? I'm nowhere near smart enough to be a particle physicist and even begin to compete for the Nobel Prize. And candidly, if you're not going to compete for that sort of stuff, like who wants to play the game, right? Now I think that's actually a really important lesson for people in a lot of ways, that you can talk yourself out of things that might have actually been a completely suitable path in an alternate dimension. But I really joined a growing ranks of individuals that were coming out of the fields of mathematics and physics and transitioned over into finance, where the use of numbers and the use of descriptors to manage large scale processes became increasingly commonplace in the late 1980s, early 1990s. And so it was, candidly, I would just say that it was a linear path. It was not there's a lot of curves along that way that ultimately culminated in me going to Wharton, studying finance, and then transitioning into financial markets.
Man, imagine your kid walking through New York City being like, Dad, couldn't you just win a Nobel finally?
Exactly. Yeah.
I'm really curious about this because St. Ignatius and like just the sports mentality and you saying it was like anti-intellectual in that way. There's something about running into greatness, like running into a Nobel laureate, like running into somebody who does that. Did you experience any of that with sports or any other domains early on, where you met somebody you were like, oh, holy crap, I'll never be that?
Well, as I said, I'm a big guy, right? I have size 15 feet, and in the pre-Amazon era, again, this is another story about my mom, right? So you'll hear that throughout as we talk about my childhood. But in the pre-Amazon days, right, it was very difficult to source shoes above a size 13, right, even above a size 12. And so as I hit my growth spurt and transitioned to size 15 feet, which looked absurd even on my body, we found out that the only place we could actually go to easily obtain athletic shoes like cleats was to the San Francisco 49ers. And so my mom managed to call up the San Francisco 49ers and said, hey, I've got this kid with these ridiculously large feet. Would you happen to have size 15 cleats? And they did. And so I went down and picked up from the training camp at that time was down in Santa Clara. And so I drove down and picked them up and actually got the chance to hang out in the San Francisco 49ers lockers. And again, like, remember, at this point, I'm a big guy. I'm the crease D on a championship lacrosse team. And I meet one of a couple of the 49ers players. And unless you've actually met these people face to face, right? So like, I'm almost 6'4", I'm, big guy. I've been as high as 300 pounds, right? Like full lineman size, but I was 15 and a half at the time. And, I'm probably 6'2" and a quarter and, let's say 210 pounds. Right. And, go in and meet, some of these guys and like, they're just not human. Right. I mean, obviously they are, but the physical character of a linebacker or an offensive lineman, I think I met Harris Barton actually. These guys are just insane in their size. Right. And you recognize, okay, that is, as hard as the Nobel Prize might be, at least I have the same body parts as Louis Alvarez, right? Like, I'm not even convinced that I'm from the same species as some of these guys. They're just so big. And so while I can't say that like I'm inspired by sports in the same way that I am by intellectual pursuits, I did, again, take that lesson from my parents that balance is really important. And so I've been incredibly lucky. I, managed to push all of my kids to maintain both academic careers and to pursue sports. arguing in particular that was just an important commitment, right? It forces you to organize your time. It forces you to use different parts of your body. It forces you to be aware of your body in a way that I would argue many people that pursue simply intellectual pursuits are not. And my kids did reasonably well, right? Facilitated obviously by even more extreme physical traits, right? My oldest son is almost 6'7". My youngest son is 6'4", and my daughter is 6'1", right? So
How tall is your wife?
7 feet. No, my wife
She's
is,
Amazonian. We were talking about pre-Amazon.
no,
But yeah.
no, my wife is actually not. My wife is tall. My wife is 5'9", but the unique feature that we both have is freakishly tall, apparently at least freakishly tall X chromosomes. So my wife is 5'9", but her brothers are 5'8". Her sister is 5 feet. Her mother is 5'2". Her grandmother was 4'10", and my mother was 5'11" with a twin sister who was 5'4", right? So it's, there's something freakishly going on there that is a genetic abnormality that we managed to combine and create, rodents of unusual size, as you might say.
Well, here's to a family of ROUSs roaming the swamps of Annapolis. I'm curious then, how does this translate to the college early experience? How's that happen?
Well, so I would actually say that, like, again, the anti-intellectual environment of high school in some ways was positive because I got a lot of partying and a lot of experimental drug use and a lot of things out of the way when alcohol use, et cetera, when I was in high school. And so when I hit college, that was kind of less important to me. And while I was social and I belonged to a fraternity and, doubt I still hold it, but held the inverted tap keg record at my fraternity, like those were not things that were particularly important to me in the context of the opportunity to explore and learn and be intellectual and challenge myself and my professors, on intellectual pursuits. Right. So, I transitioned to Wharton from California as an undergrad. Wharton as an undergrad is, I like to describe it as, the most prestigious vocational education you can get. My youngest son is at the U.S. Naval Academy. I'd probably amend that now because I do think that they're very similar in their construction. My daughter actually went to Wharton as well. That was a really interesting time period, right? So I got into Wharton because, in part, I would argue that the baby bust had come along. I was part of it. The schools had all expanded for the baby boomers, and Penn was struggling with being a regional school that was, trying to get attendance and high quality attendance. And so they opened up an avenue to California and aggressively pursued many Californians. Just around the time period that I was admitted, I joke, not, without, absolute truth to it, that I never would have gotten into Penn were it today. And I think that's actually telling you something is really wrong with the system, by the way. The stress that I watched for my kids through the college application process suggests that, like everything else, this is just another form of monopoly that's increasingly dominating our society. Monopolies, by definition, maintain their value by underproducing relative to demand. And candidly, it's absurd to me that a place like UCLA has gone from a 70% acceptance rate when I applied and got in, unsurprisingly, to today, I think it's a 7 or 9% acceptance rate. I mean, these are absurd numbers and they shouldn't exist in our society. But in the context of that relative drought, Penn was somewhat flourishing in terms of intellectual experimentation, particularly around finance. This was, the advent of a lot of the work around option theory. Portfolio insurance had just blown up in 1987. I had professors like Sandy Grossman, who I talk about all the time in the Grossman-Stiglitz paradox, without even fully realizing the caliber of the people that I had. One of the professors there was a guy by the name of Gary Gorton, who was far more so than me, right? Just an iconoclastic, character. He came from a poor background in Michigan, and is, one of the most interesting people I've ever met. He tells stories of, driving a cab while working on the assembly line as he's studying, Asian literature at the University of Michigan to get a PhD. in a field that he never even bothered with before transitioning over to finance, right? And Gary, the world probably knows him from two separate things. He was the author of a 2005 paper called Facts and Fantasies of Commodity Figures that kicked off the ETF boom and the institutional investment in commodities in 2005, which certainly played a significant role in my career. And he also was the guy who advised AIG, right, on building CDS models. Gary took me under his wing, made me his teaching assistant. That meant that as a junior in college, I was the TA for MBA programs, grading MBA, tests, results, and papers, and facilitated a transition to where I started, taking courses in the MBA program and then to the PhD program. And by the time I left Penn, it was just absurd, right? I think I graduated with 47 credits as compared to the 36 that were required at the time. And honestly, just was like, I did everything I could here except get the advanced degree. And candidly, I chose not to do that for the very simple observation. I realized we were at a dead end in finance at that point. We just didn't actually have the theories or the computing power to allow us to do, or candidly, the data, right? So the granularity of data to allow us to do a lot of what is being done today. So I made the transition out, actually initially went into focusing on corporate finance. I was much more interested in M&A. And I've described this elsewhere, but it's hard for people to orient themselves to this sort of stuff. But remember in the early 1990s, not every desk had a laptop or even a computer on it. Most people had never used Microsoft Excel. Valuation techniques were, basically what's the PE sort of thing? The idea of the discounted cash flow model had been taught for a long number of years at select institutions, but really hadn't percolated in the manner that it had. And so along with a couple of peers that initially went into consulting and for advisory work, and then made the transition to valuation work, we built a software package, and began selling that to corporations like PepsiCo or various other entities. The accounting firms were big users of it, focused around valuation for corporate strategic planning purposes. And in 1996, this random guy, Mitch Julis, reaches out and says, "Hey, I found your stuff on the internet. Would you be willing to come in and talk to me about, how you think about valuation?" And Mitch was running, along with Josh Friedman, a firm called Canyon Partners. Canyon was well known for having come out of the blow-up of Drexel Burnham Lambert. I think Mitch was the head of research. Josh was the head of sales, corporate sales at Drexel. And so they both worked closely with Mike Milken. In the early 1990s, Mitch was super interested in this idea of valuation work. And he encouraged us to link our valuation tools to public equity databases that had just begun to emerge at that point, things like CompuStat, et cetera. We found we had a tool that could be used for valuing public equities. And so we did that until 1999 when that firm was sold ultimately to Credit Suisse. It still exists as a quantitative arm within what is now UBS. And actually I use some of their tools and some of the funds that I manage, products that I've developed over the years, and took that opportunity to transition over to the buy side and asset management. And so that is the kind of formal start of how I got to where I am today.
I'm going to zip back to college and then back to the
Sure.
future us all the way into this period. Getting to Wharton financially, how'd that happen financially?
A lot of scholarship.
Did your mom help you do
Right.
it? Were you just determined to do it? No.
How did that
actually happen?
Don't mistake me for actually a highly motivated individual, right? I mean,
This is why I asked if your mom did it for you.
No, my mom did not do it for me, but the process of actually applying to colleges and stuff, all of that was very, very different back then, right?
Right.
So, I mean, this idea that your parents could write your essays for you or do any of that sort of stuff, we had to type out it sounds crazy, right? But we had to type out our essays, right?
And the other side of the country, we're talking thousands of miles here between you and
they said the mail still existed. I think it came by Pony Express at that time, but it was they did send you an application package, but there was no common app. There was no, coaches around how to apply to the system, et cetera. But the offset to that, of course, as I said, was UCLA had a 70% acceptance rate, right? Like I had easy fallbacks in the UCs. It was a stretch to get me to have the opportunity to go out to Penn, and, generous quantities of financial aid. And again, tremendous sacrifices for my parents. I mean, they really, they lived a much lower quality of life in financial terms than they would have had they chosen to decide selfishly that, public schools were good enough and everything else. I've looked back on that with a lot of questions about how that would have influenced outcomes had they chosen differently. And I don't know, right? It's an impossible counterfactual.
And Wharton is on your radar because of this whole like recruiting.
That's actually,
like, how do they
actually, that is a funny component that does involve elements of modern stuff, right? So in the college counseling lab at SI, there was a computer program that you could plug in and like list, put your test scores and everything else. And it spits out school, and your interests, blah, blah, blah. And I did have a strong interest in the stock market at that time. And it one of the schools that spit out was Univ of Penna. Right. And I'm like, what the hell is Univ of Penna?
I'm going to Italy, Mom.
Yeah, exactly. Not Pisa, but Penna. And like everybody else in America, I thought that Penn was Penn State. It was only after it had hit the link, and when Penn came to speak, I actually couldn't attend their conference because I was taking I think it was actually a calculus test. But managed to chase down the college rep, who came to actually speak and, introduce the West Coast to Penn. And she's like, "Oh my God, you're awesome. You absolutely have to apply." And so there's just a series of luck that plays out and how you end up. And again, that's one of the reasons why the counterfactual is impossible to establish, right? If I'd gone to Berkeley, maybe we'd be talking about the work that I've done in saving the climate and, how, my macrame work is noted throughout art galleries around the world, right? Who knows?
Less macro, more macrame. I love it.
Possible.
How do you physically get, is it a plane? Is it a drive? What transports you across the country?
Well, again, it's one of those funny things. Like my mom didn't even drive me to the airport, sort of thing, right? Because that would have been relatively expensive, right? So, no, I just I caught a ride with friends and say goodbye to my mom and in our apartment in San Francisco at that point, and got in a car and went to the airport and showed up in Pennsylvania. I will tell you a really funny story about that, though. As a Californian growing up only in California, having had very limited travel experience, I get to Penn and I want to go to New York City, right? And so I flew, right? I actually got a plane. I got on a plane from Philadelphia to go to New York City. And I realized only, this is I think this is my freshman year. Yeah, this is my freshman year. And I realized, because my dad tells me, I'm going to be in New York City, let's get together, right? And I'm like, okay, well, so I'll get to New York City, right? And I take some of my limited funds and I go and I book a flight from Philadelphia to New York City. Nobody, of course, says anything to me, right? This seems totally normal until I'm in the plane and I'm strapped in. And, the plane literally is like a ballistic missile, right? It's like, ladies and gentlemen, we're beginning, we're beginning takeoff. And by the way, prepare yourself for landing, right? It's completely insane. And I realized that it had just never occurred to me as a Californian that you would have two major cities that were, within an hour drive of each other, right? Like it was completely insane. So that gives you some idea how clueless I was as an 18-year-old.
Well, I'm glad you enjoyed that flight, even if you didn't get that.
I've never forgotten it. That's for sure.
That's incredible. So, post school, who do you start the business with? Like, was this isn't just you by yourself?
No. This was me along with a couple of guys that are from the consulting field as well.
College
Glenn Welling, who actually, yep, one of them was, and another one was. The other two were individuals actually that Glenn had met So Glenn Welling, my partner in the business, has actually gone on to found a hedge fund as well. He worked for Credit Suisse for an extended period of time. And he's a great guy, very successful. The other two individuals, Anthony Vanderbilt and Michael, I'm totally blanking on his name, on his last name. This is embarrassing. Were actually South African in origin and quite thoughtful individuals who were absolutely fantastic. We did our development out of Australia, where Glenn had actually been based for consulting purposes. Turned out, people forget that in the early 1990s that the Australian economy was so depressed. This is the last recession they ever had, that the state was offering 125% R&D credits for software development. And so you could actually get your entire program fully funded if you could find a single paying customer in the country of Australia. We were fortunate that Deloitte and Touche did that for us. And, the rest was kind of history.
Did you go to Australia for this, or was it enough just to establish the entity there to get the credit?
So I moved to Los Angeles and spent a lot of time in North Sydney, but where our offices were, but I still was able to stay US based.
It's so interesting to think about, especially that point in time, because this would be the early 90s still, early to mid 90s.
This is still, yeah. I mean, 1890s, by the way, just to be clear. But yeah, no, this is the early 90s. Yes.
Yes. So as we've established, Pony Express and everything else so far.
Right.
So the business is, would you say wildly successful?
Moderately successful, but let's be really straightforward. Like the exit, I exited at a multiple that I thought was fantastic. And then it got caught up in the, kind of valuation nonsense around software. And so initially it was sold to a firm called Holt, which is the continuing entity at UBS. And then Holt was acquired by Credit Suisse at a 10x multiple 12 months later. And so my decision to exit the firm was actually probably the worst financial decision that is ever made, right? If I'd stuck around for another year, it would have been a life-changing sum, but I just didn't do that.
Well, there you go. You blew one life-changing sum right there. But you take that money.
I've blown multiple life-saving sums. Let's just be really clear on this, right? I mean, there's any number of paths. As I said, I gave up a career as the world's preeminent macrame artist, right? It's just, the choices that you make are choices that you make, and you can't inhabit the past in that context. You have to look at each opportunity as a chance to learn, and that's up to you whether you choose to do so. I'm sometimes skeptical of my own abilities in that front, right? But you kind of play this game every once in a while. It's particularly easy in finance, right? Well, if I just bought Apple here, and if I just bought X there, and if I just done. For me, one of the most interesting movies that's out there, it's somewhat of a terrible schlocky movie, but it's both my and my daughter's favorite movie in the context of it's something I turn on if I want to self-soothe, is a movie called About Time, right? Which is actually about a random time traveling teenager growing up in England, and his recognition over time, right? That the less he actually goes back and changes his choices, in many ways, the happier he is, right? And that you actually don't have a lot of choices, but there is a particularly poignant point in that in which you recognize that the minute you have your children, that game stops, right? Because anything that you do before that means you might not have those kids. You might not have those individuals. And that for me really changed my life. When my kids were born, I became a very different person. If you met me in my 20s, you would probably been like, that guy's an asshole. Now, a lot of people will still say that, but that was very much a function of never having struggled, never having, had any humbling events kind of thrust upon me. And the minute a kid pukes on you, like it's a humbling event, right? You got to deal with it. And, you recognize very quickly that it's a different path from that point forward. I think that's candidly one of the reasons, financials aside, why a lot of people struggle with kids, right? And the decision to have kids, because it is the point at which, the kind of current mantra of adulting is hard. Well, dude, you just ran out of excuses, right?
Yeah. When in this timeline, because I know we're getting close to the point of where kids happen, like when and where do you meet your wife?
I met my wife when I was 27. I think I was 27, just about turned 28. And we randomly met in a nightclub in New York City. She actually was a dropout for the PhD program at Duke. She was actually in the same class as Dan Ariely of Irrationally Predictable fame, who's a very interesting guy and a good friend of hers. And has become a friend of mine over time, even as we completely disagree, by the way, around behavioral finance and many other things. So it's always very interesting to have those types of developments. But I was actually in New York on business and showed up at one of my friend's birthday parties after a series of business meetings. And there was another guy there who's like, hey, I'm, co-promoting this, grand opening at this new club. And I can get us into the VIP room. We can all go, et cetera. I'm like, oh, that sounds like a lot of fun, right? And so I'm in New York City in April. I'm wearing a nice suit. I'm tan because I'm from California. And my friend whose 30th birthday it is like, Mike, I don't know what the hell is going on, but girls are checking you out. And your birthday gift to me is to go out on the dance floor with me, because attractive girls are going to try to dance with you, and their less attractive friends will dance with me. And then he made a terrible mistake. We're on our way out to the dance floor, and he's like, you look good enough tonight. You could even talk to this girl. And I looked to see who he was talking about. My future wife smiled at. I never made it to the dance floor.
So you guys meet, is this post you getting, like, where in the 90s are we at this point?
This is 1997.
Okay. So this is after you got the check?
No, this is before I got the check.
Before the check. Okay.
Yeah.
So you're still on the upswing. So it's not like you showed up like,
oh yeah, no. After that, it's all downhill. Let's just be very straightforward. But yeah, no, it's, yes, I'm still on the upswing.
Okay.
I'm still arrogant. I'm still an asshole. She called me on some aspects of it. She certainly had elements of that as well, I'm sure, in hindsight. We were two young, dumb kids in love, right? It's just that simple.
How fast do you get married?
We got married relatively fast. So we got engaged. So I was still living in California. She was living in New York. She had dropped out of the PhD program and was promoting nightclubs in New York City. She was interested in marketing, and actually became quite prominent in that community. And when the time came, it was like, okay, we need to decide that this is like, we're going to do one of the two. And I was fortunately successful at that point that I was able to live bi-coastally. And so we were maintaining a place in New York and a place in California. She moved out to be with me in California. And we got married roughly 9 months after that.
That's awesome. That's awesome.
Yeah. So I was 29 and 51 weeks or 50 weeks before when my youngest son or my oldest son was born.
Okay. And is this still pre-check? Does the wedding happen pre-check? Not to make the money at all part of this.
Yeah.
I just think
let's not focus on the money.
No.
But yeah, no. No, literally the sale of the business happened, about a month before we got married.
Okay. It's just an interesting part. Like, that's a lot of life, especially now that you just said,
oh, dude,
first kid came right after this too. So it was marriage,
right after,
business sale, child.
Well, yeah, technically business sale, engagement, business sale, marriage, child, right? And it was close enough, by the way, on the child portion that my wife had to explain to her, deeply conservative Italian grandmother, how it was possible that she might be giving birth 8 months after a wedding, right? Her grandmother was like, I'm not sure I believe this stuff, right? But anyway.
I'm the product of one of those stories too. So,
no, it was legitimate, but yeah. I mean, not what we told her grandmother, but
so
my oldest son can be a pain in the ass, but he's not a bastard. Let's put it that way.
There you go. So what's that experience like? You're out of the business. Do you start something else immediately after the sale of the business? I mean, new dad stuff?
No, so I actually joined one of my clients immediately after that. So, when we go through that process, and for me as a transition to asset management, as I looked at various opportunities and kind of knew that this was going to be happening, recognized I didn't want to stay in software sales or even transition to an investment bank and do the work at the investment bank at this point. I really wanted to actually manage assets. I'd spearheaded our push into the asset management space. And so I did kind of a survey of the various opportunities that were available. One of my clients, a firm called Moody Aldrich Partners, ran a small cap and mid cap value fund. And in the analysis work that I had done, it's like, well, this is really straightforward, right? By far the cheapest components of at least domestic markets that I understand and know are small cap value. This is a no brainer, right? And so transitioned into that role, July of 1999. And thank God it didn't happen a year earlier, right? Because
Wow.
I'd been doing this for 2 years by the time we got to the dot-com collapse. I might have had an entirely different career.
Like
right?
you holding out, you not getting the check. Yes, if you stuck
You were
around.
really focused on this check, man. Now, let the check go. It's not a life-changing sum, but it's but no, it is absolutely important for people to understand like the luck that is played in those types of components, right? I mean, you're familiar with my Twitter character. Part of the reason why I adopt that avatar is because of an experience in February of 2000. So, I'm the young, talented guy who's been brought in to help, bring this firm into the modern era. And I go and present to our clients and I talk about the work that we do around valuation and how we think about individual companies and, the incredible opportunities that are represented by auto parts manufacturers trading at 2 or 3 times earnings, or home builders trading half of book value. And I present to our largest client, a process that was a traditional review type thing, and still is for many active managers, although there's far less of this today. And the reason that this story is relevant is I finished my presentation. Again, remember, this is February of 2000. My firm has done better than the benchmark, but far worse than the NASDAQ in the year before. And I give the presentation about the opportunities, and this member of the board at this university stands up and says, "This man is the dumbest man alive." Right. And I'm literally like, holy crap, I probably should have done physics after all. Right. But he proceeds to give this speech about, how somebody of my age, I'm still 29 at the time, how I could not understand that we were transitioning to a new model economy. The new economy was dominant. I was talking about old economy opportunities. And that as a board, they should immediately fire us and replace us with somebody like his firm that was up 400% the year before. Right. They did so. And, it was one of the first times in finance that I thought that I was going to get fired. But the irony to that story is that I had no idea who the guy was until years afterwards, when I discovered that his name was Alberto Villar. And if you don't know who Alberto Villar is, he was the founder of a firm called Amerindo Technology Advisors. They were a high flyer in the 1990s. And by 2003, he's in jail, right? For fraud, having stolen all of his clients' money, or many of his clients' money, most famously Phoebe Cates, mother of Phoebe Cates, I'm sorry. And his funds are down 96% and my funds are up 167%, right? And so it was a very interesting experience to actually be in the right place at the right time, to experience that vitriol and that dismissiveness, and at the same time come out of it on the other side.
So how's that end up? What's the connection to the Twitter avatar? Thread the needle all the way for me.
So
That's okay.
So Professor Plum is actually a byproduct of my time in the PhD programs and the early introduction of Unix email and systems. But I couldn't be Professor Green because that would be presumptuous. I couldn't be Mr. Green because that would be presumptuous. But Professor Plum, that's a cool character, right? That works. Okay. But the avatar of Wallace Shawn from The Princess Bride is actually directly from that recognition that if I think I'm the smartest man alive, I'm going to get killed, right? I'll play a game I don't understand the rules to, right? And that I keep that character to remind myself that I can't possibly know all the rules of the game that I'm playing, that somebody else can show up with iocane powder resistance and the world ends if you're overconfident in those environments.
Are you secretly the Dread Pirate Roberts? Is this where this is going?
I am most secretly not the Dread Pirate Roberts. Maybe Kermit the Frog, though. But anyway,
That's a honorable, honorable place.
yeah.
So what happens with the fund crushes it? You do
Yeah,
great.
so we did very well. We survived through that process. Although, again, a really interesting learning experience is I joined a firm that was, coming out of a period of underperformance. And one of the more interesting things that you discover is, as you do that, your performance becomes an excuse for people to redeem and try something else, right? And so the firm itself struggled, even as performance is great. We came out of 2003, one of the top performing funds. That led to me getting recruited by Royce and Associates to go down to New York to manage mutual funds at the preeminent small cap specialist. Still label Royce as probably the finest investment environment I've ever worked in, right? So they didn't
Really?
hire analysts, they only hired PMs. Everybody had to have a minimum of 5 years experience. And so I just barely made the cutoff when I joined in 2004. And it's just a phenomenal place, right? Where I walked in, I think it was March 2004, and we were managing, I think it was $14 billion. When I left to join Canyon Partners in 2006, we were managing $52 billion. And so we just had this flood of capital come in.
Wow.
We had this incredible performance track record that emerged. The leader of the firm, Chuck Royce, is still, I would describe as one of the best individual investors I've ever seen. I mean, I didn't meet him until later in his life, but even today, 20 years after that, I still hear of his, steel trap mind and his capacity to identify a business in just a few heartbeats, right? And so really, when you're trying to learn earlier in your career to put yourself in a place like Royce, where I estimate in the 2.5 years that I spent at Royce, I probably met with in the neighborhood of 2,000 to 3,000 companies. Right? I mean, just an insane number of companies marching through every single day. And Whitney George, who was the second in command and who I directly worked with, was just like, I want you to meet, every single management team. I want you to see every single type of business. I want you to be able to tell me what these businesses do, not necessarily what their business description is, but what the source of profitability is, where things are coming from, et cetera. And that can only be managed in kind of that 10,000 hours type framework, right? It's probably more like 1,500 companies than 10,000 hours, but it was just an extraordinary learning space.
How do you exit Royce? What's the end of that? To Canyon.
I'm walking down Fifth Avenue in New York City, about a block away from Royce, and I run into Mitch Julis. And Mitch has at each step in this process, Canyon Partners try to hire me to move back to Los Angeles and come to work for them. Mitch had become a friend and an occasional advisor on my career. We ran into each other on the street, and he said, "Hey, part of the reason I'm here is we want to open a New York office. We'd love for you to do it, but we've tried to hire you a couple of times and you've turned us down every single time after getting right to the finish line. Is it us or is it Los Angeles?" And I said, it's Los Angeles. And this was exactly the time, this kind of March 2006 sort of time period, in which I'm recognizing that the catalyst that I saw in 1999 in small cap have played out in the opposite direction, right? And so we've moved from a world in which there was complete disdain and disregard for tools around valuation to, by March 2006, we exist in a world in which, otherwise bright young hedge fund minds are like, well, if I short this company at 9 times EBITDA and I buy this company at 7 times EBITDA, there's an arbitrage profit that you can lock in. And I was just like, you do understand that's not actually an arbitrage. That EBITDA is not cash flow to you, right? And it was like, yeah, but valuation is the most important thing on the planet. And as that was actually happening, what was really interesting was that the valuations had climbed significantly for small cap names, even as they had compressed for many of the leading technology stocks and everything else. And so I gave a speech in March 2006 at a Lehman Brothers conference, ironically in California. But this is, Lehman Brothers small cap conference 2006. And I gave a speech on the bubble in small cap value and was like, look, everything that we thought in 1999 has now actually reversed itself. And I gave examples of, this is what we were paying for this company in early 2000. We're now paying 5 times as much for the exact same company with far, smaller growth prospects. And it was really interesting in that context. And it was right after that Mitch and Josh, said, okay, we want to start the New York office. And so I think it was May 2006 that I launched the New York office of Canyon Partners. And at that point, I had already started doing work around the housing market and was very involved in the commodities markets. And so made that kind of the centerpiece of a lot of the stuff that I did at Canyon Partners, and was just really fortunate, again, that Mitch and Josh, gave me the flexibility and freedom to pursue stuff that might not have otherwise been pursued.
Now, why does a California kid not want to go back to California, though?
Well, there's 2 separate reasons. One is that it's terrible for market hours, right? So it's hard. And I have gone back, right? So when I was managing Peter Thiel's capital, I went back again, right? I feel like Forrest Gump. I went back to the White House again. The second thing that I would say about California is that unless you are, and even if you're involved in technology, there's an intensity that is lacking there. And I don't know whether it's the wonderful weather or the ability to be outdoors or anything else, but on the intellectual front, I tend to find it not as stimulating. Now that's easier as you get older, right? So I go back out there, I'm working with Peter Thiel, and there's lots of really smart people around, and it is intellectually stimulating. Anytime you sit down with Peter Thiel, you have to be intellectually prepared for a battle. But there is just a much lower and slower pace of life in California. And certainly in my younger years, I wanted that intensity. I wanted to have those experiences. And of course, the last thing is I married a really beautiful woman, and nobody wants to move her away from her family. So let's not underestimate that portion of it as well.
No. How many kids are we up to at this point?
16. No, we've got 3. We have 3 kids. They're totally grown. And the youngest is a rising junior at the Naval Academy.
There we go. So at this point in time, in like 2006-ish, all 3 kids are.
Oh my God, are we still in 2006? Yeah. So all 3 kids.
We're
have been
never going to get up to current day, but we'll get close enough.
This is like high school history, right? So 2006, we have all of our kids. We're living in New York. I joined Canyon Partners, launched the New York office. Have a fantastic, second half of 2006, 2007. And then I'm actually doing really well into the crash in 2008 because I'm focused on commodities and everything else. And that's where the second story that I tell people about a bookend of my career, I go to, it's June 2006. And I'm literally sitting there going, this is really wrong. There's something really wrong that's underway here. My commodity stocks are up. My commodity stocks in some situations started to fall. My commodity positions are rising. My bets against financials and home builders have already begun to pay out. The bet on the CDX has already largely paid out. And I go to lunch with a young hedge fund manager, and we're talking, and he goes, Mike, you might be the smartest person I've ever met in this industry. And I literally, my blood ran cold, and I went back to my desk and I wrote a message to Mitch and Josh. And I said, I want to liquidate all my positions, because if I'm the smartest person in this industry, I don't know what the technical term is going on. And I don't think I should be running significant sums of money at this point. Now, people forget in June 2008, this is when oil prices are headed towards 140. And the real fear is not a financial collapse. The real fear, even because we've been through the housing cycle, right? We know that's a problem. We've been told that subprime is contained. By and large, there's a lot of evidence that's true. The Fed had stepped in to save Bear Stearns, right? We're through that process. And I say, there's something really wrong. Another really talented energy analyst at Canyon Partners wrote a note called, in which he highlighted that the rising oil prices were a tax on consumers around the globe that amounted to a huge component. I echoed that. And I said, look, this is the current view that we're heading into this inflationary collapse of the dollar and blah, blah, blah is just wrong. Like this, I don't know what's going on, but I can't explain why prices are rising in this way in the commodity space, other than I didn't fully appreciate the dynamics of flow in the way that I often articulate today. But take me out. Right. And Mitch and Josh, to their credit, were like, okay, well, let's reduce it significantly. At the time, I think I was running about $750 million. Let's cut it down to, 250. And then you continue to run commodity positions for the firm. But we're more than happy to take the, roughly $500 million that you're managing and willing to give up to put to work in the incredible opportunities that exist in levered loans trading at 95 cents on the dollar. That was the investment philosophy then. And I'm not faulting Mitch and Josh for this, right? Because that is what almost everybody believed. It was believed that subprime was contained. And then they banned shorting. And then they let Lehman fail, right? And the whole thing takes on an entirely different character. And that was just an incredible experience to go through that. I don't think people really understand how close we came to economic collapse, at least in terms of the financial system going through that. To have a front row seat to it is something that, a lot of money did buy, but candidly couldn't, right? You had to be sitting in the right place at the right time. And, again, it was one of those weird things where, as the TARP failure causes the lows in October, I go back to Mitch and Josh and I'm like, okay, I know I'm down on the money I was left with, but, everything, now I see real opportunities, think that we've cleared out a lot of this stuff. I'd like to, really start putting money to work. And the response is, yeah, about that money, it's all gone. And the money you have left is basically the only liquid money in the firm. So we're going to have to take that too. Right. And that is where I really began to appreciate the dynamics of flow. And where I saw it in its most important form was as we came into March 2009, where it was painfully clear that we were coming out the other side of this, that the cavalry had arrived, the support was there, et cetera. But what the hedge fund world was correctly, or at least correctly focused on and afraid of, was redemptions hitting in February. Right. And so at the end of February, we have monthly liquidity and we're being told we anticipate a ton of redemptions. Everything in your portfolio should get as liquid as it possibly can. Right. And you should be selling out of anything that you really can. Right. That's what that last crash was. That's what March 2009 was. It was funds preparing to meet quarterly redemptions that actually ironically never showed up. Right. Instead, we got subscriptions in March of 2009. And, that flow component, the reversal of that, not the Fed or David Tepper or anything else, is really what I credit with the rebound that we saw in March 2009.
I know we're not going to get far past this period today, which is fine. What's the emotional, that's a roller coaster, 2006 through March of 2009, to be on the front. That's a very extended period to be at a very heightened level of stress, the awareness.
Yeah, I would say the stress part of it really didn't kick in until the shorting ban. And that's one of the reasons why I highlight that as a much more important component that people currently give credit to. That ended your ability to run market neutral. Right? You couldn't be short the stuff that you were highly confident was going to go down. That meant you had to reduce the positions and things that you thought might go up. It made it much harder to manage money. Now, it may have been necessary. I can't run the counterfactual, but I can tell you that really contributed to the collapse in confidence amongst the investor class in that environment.
The family's aware of this. Like the kids are aware of it. The wife is aware of it. Dad's going through some stuff in the world.
Kids are too young. Kids are oblivious at that point. My oldest son was 8 years old and, still far more focused on chess than anything else. Right.
Right.
My wife, I think, was aware of it to a certain extent, but I worked really hard to shield my family from it in total. And actually, you mentioned at the start, I bought as a vacation property in 2007, September of 2007, a a property on a historic ice farm in Pennsylvania, not far from where she grew up in Wilkes-Barre, which is near Scranton, by the way. And people joke about this because it became the name for my hedge fund years later, Ice Farm Capital. But people forget how large the ice industry was in 1900. So this was a, roughly 200-acre aggregate property. We owned about 10 acres of it, along with a lot of parts of the original ice harvesting operation. There's a lake that was fed by 5 artesian springs. So the reason I emphasize artesian just means from the ground. So it's not snowmelt fed, right? Which is pretty important. If you're going to grow ice, you can't have the snow melting to provide your water. And so the lake was a man-made dam, and they harvested ice on it from basically 1870 until, give or take, 1930. The ice harvesting industry was the 7th largest business by revenues in the United States in 1900. And that, phrase that you hear, the ice box, right? That literally referred to a box that held a slowly melting block of ice that was delivered by an iceman. You didn't actually own your ice box. It was leased from the ice company, right? So this is very much like the cable model of today, which is also in the process of dying. But that business completely disappeared in the 1920s with the broad advent of rural electrification and modern air conditioning and appliances and everything else, right? And so again, I like to intersperse these historical periods where it's like, look, you think things aren't going to change, and then they change radically, right? You think you know the game, and then the game changes. Those for me have been really important lessons in life. And anyway, so long story short, my family is actually in August 2007, which was for me the worst period. Because that's as the commodities are collapsing and prior to things starting to make sense with the failure of Lehman Brothers, that, okay, there's like definable components that I can now point to understand this. This now starts to take on historical models that make sense in the context of a collapse. But like that, the month of August, like I'm basically sitting by myself in my apartment in New York City going, holy crap. Like, this is all coming apart. I call my wife in Pennsylvania, and I'm like, all right, do me a favor and open up a couple of bank accounts in Pennsylvania. And she's like, why? I'm like, I'm just worried about what's happening in the financial system. I want to make sure that we get our savings under FDIC insured limits, et cetera, et cetera, et cetera. And to actually have those conversations was a very terrifying experience, right? Really, like, just to actually have that. And then in the context of it, again, like I've talked about this elsewhere, remember, I could very well lose my job and my savings, right? And the value of everything that I own, and, blah, blah, blah. Like, this is all, happening in the context of a young man who has, what certainly to me, I would refer to as a kid, right? Who has 3 young kids who completely depend upon him. So it was an interesting experience, both on the personal and professional component. And it is one that candidly, I think a lot of us navigated somewhat alone.
The aspect of flow, kind of like controlling that story or being a central part of that narrative, did that, I don't want to say mess with your head, but it seems like that must have really carved it.
No, because at that point, remember, I'm still the smartest guy that's ever existed in the hedge fund space. And so I am so full of my own nonsense that, like, I didn't actually fully appreciate the flow components of it. Right. And that is actually, like, I was self-aware enough to say, holy crap, if I'm the smartest guy, like, we're totally screwed. We need to get a couple of Nobel Prize winners in here. Oh, that doesn't work very well in finance. So, and it is that overconfidence, by the way, in somebody who wins the Nobel Prize that often contributes to the sense that the model is the world, right? And my models were just off, and I've seen similar things happen in a variety of periods. And I would say, like, if there's one thing that I bring to the table, it's the willingness to say why, right? Like, what is causing the way I view the world to no longer describe what I'm seeing happen? And in that environment, you have 2 choices. You can decide that everybody else is stupid, which is a very classic 20s male response, right? Or you can say, is there some part of this system that is failing to capture the way that I'm modeling it? right? Is there a variable, an undeclared variable that I'm missing that's causing behavior to be radically different? Physics lends itself to that, right? If you see the wobble of a star, well, it could be dancing, right? That would be a religious interpretation of it, or you'd say that there's a foreign body acting upon it, right? When you see these things happen, you want to ask yourself, what is the nature of the system that is causing this behavior?
It also brings to mind, I'm pretty sure it's the Vonnegut quote about how the world ends, the last words uttered by humans. Do you know this joke?
Oh, I don't know. I don't know the quote, but I'm sure I've read it, and I'm a huge Vonnegut fan, so I'd love to hear it.
Yeah, it's something along the lines of, I wonder what this button does. Yeah.
Oh, okay. That makes perfect sense.
I got some notes. I want to just go through these real quick, and I want you to weigh in on anything that strikes your fancy here. But we're gonna have to do a round 2 on this at some point if you're game for it. I loved at the beginning just you explaining your mom and at 3 cutting the heads off chickens, but I feel like you learned the presence of death. You learned the importance, if not some of the bizarreness, of volunteerism. You learned the significance of the scientific method in weighing all these things out so that there's, like, you start to see those constraints from a really young
100%.
age.
Yeah, very much so. I think I really do think that's actually, understanding that we exist in a non-infinite universe, a finite universe, that there are constraints, and that constraints largely explain behaviors in chaotic systems or near chaotic systems, right? If you play paddleball, right? Or not, it's not I forget what it's called, where you got the ball on the string. The thing on the rubber ball on the string. So, the actual behavior of the ball is random until it reaches the maximum extension of the string. And then you have two separate possibilities. The string is weaker than the mass that exists as it's trying to decelerate the ball, and the ball will fly off into space, or the ball will come back. Right. And it's those constraints that allow you to think about a finite system or a chaotic system with some levels of rationality. I gave a speech in 2010 on exactly this topic to the CFA Society of New York, talking about constraints and how to think about limitation in a complex dynamic system, using a model of kind of like a 3. When I used to give some of my early pitches around passive, I used to actually literally illustrate it with an inverted triple pendulum. And a human being can't even keep a normal inverted, it's the equivalent of balancing something on your hand, right? You can do it for a long time, but only if you have multiple degrees of freedom, right? So if you can move horizontally, vertically, and horizontal, X, all Y, and Z, right? You can control a single axis pendulum, right? The stick on your hand. Now you try to do that with a 2-axis pendulum, a 2-jointed pendulum, right? Can't do it, because you can't actually manage the up, down, or back, forth enough to maintain the tension in the second joint. Go to a triple, it's not even worth considering, right? But machines can manage those. There's actually a fantastic video. You might want to upload it and share it at this point in the discussion, of a triple inverted pendulum being managed by a machine working on only a single axis, x-axis. And it's astonishing what a machine or an algorithm can do in that framework. And that's really the model for the low volatility regime that we often inhabit around things like derivatives or everything else. And so thinking in those terms of constraints and the value of those constraints, I gave it in terms of education and exposure, et cetera, right? Like, we need constraints. We need rules. We need limits. Otherwise, it's just random exploration and totally unfocused.
It's fascinating too, especially with that example, because that's like the fact that the machine can do it and the human can't. You've run into this.
So that could lead to two interpretations. The machine is better, right? Or the human augmented of the machine is better, right? And the reality is the human augmented with the machine is what matters. And so how we choose to assign responsibility for that, and this is part of the component of passive, right? Those who follow my work closely on this sort of stuff will understand. I say there are mechanical aspects of this system that we need to recognize, create the illusion of superior outcomes, followed by a serial collapse, right? Meaning time-based over time, this system has to break, right? It's really hard for most people to actually grasp that component and see through these systems. And that may be the single greatest benefit that I've had from having that experience.
Coupled with like the reminders of the little luck and accidental humanities that accompany that along the way, because we're talking to the same person who runs into Mitch Julis, walking down Fifth Avenue, the same person who gets on a flight from Philly to New York because
what an idiot. Dumbest man alive.
Dumbest man alive. The same guy who gets called both the smartest man alive and the dumbest man alive. And I'm not here to tell you you're the most average man alive. I'm scared that I'm going to set off the next like eruption in life or something. Make any broad declaration.
I certainly fit somewhere between those two, right? I'm very comfortable that I am neither the dumbest nor the smartest. And so where I fall out on that distribution, I'm just not going to spend that much
time. You're just the third axis pendulum in the
I'm the Z axis. There we go.
There you go. You're the Z axis to the pendulum here. I loved and to clarify, like it's not obsessing over the check so much as the dollar amount of it, but just like the confluence of adulting, Mike Green, that comes into play in all these. That's a lot of major life decisions and a lot of things that, like you said, the different paths can totally change trajectory. What an intersection 100%. In life.
Oh, absolutely. Just think of the lost macrame art, right? It's, no, it really is. Like and this is one of the things that I would candidly suggest is one of the problems that I see in our world today, where we've inherited kind of a neo-Calvinism, right? We kind of tend to believe that people are predestined for greatness, right? Mark Cuban knows X, therefore he's rich, right? What it really is, he's rich, and therefore people believe that he knows X, right? At a young age, I played Tevye and Fiddler on the Roof, and I've never forgotten the most important line from that song: "When you're rich, they think you really know." Right? Look, I can't tell the future any better than anyone else. I do know that I have a reasonable talent at evaluating constraints, and one of those constraints should occasionally be to sit down, shut up, and listen. Right. And there's just not a lot of reasons for people that are gifted with extraordinary financial resources, both through skill and fortune, right, to do so in today's world. By the way, Peter Thiel, I actually think is one of the most remarkable people for his willingness to do exactly that, to actually listen. He may disagree, but he's at least going to consider the argument.
There's something about crystallizing those thoughts, about being willing to take the water and crystallize it temporarily, about you being from valuing melting ice cubes as stocks to buying the ice farming operation to shield your family from the financial crisis. This has been an amazing conversation. I really hope we get to do a part 2. I'll take you global financial crisis forward in it'll be like the high school class at the beginning of Wharton.
I will tell you, Matt, you've done nothing other than remind me of how old I am becoming, because I need history in 2 parts, right? It's terrifying. But no, thank you very much, Matt. I enjoyed the conversation as well. It's definitely different than the normal conversation I have.
Michael Green, truly intentional investor. Thank you so much for joining me today.
Thank you for having me, Matt.
Thanks for tuning in. Be sure to like, share, and subscribe wherever you're watching The Intentional Investor so more people can find our show. You can follow Matt directly at cultishcreative.com or at cultishcreative on Twitter. For more great content at the intersection of investing and life, check out epsilontheory.com or at epsilontheory on Twitter.